Hello, everybody. You're really welcome to our live show here today. And as you can see, today we're joined by another guest here, Kent Ashmore. Kent is a very good friend of mine, and Kent also runs a very, very successful wealth management and financial planning business based in Enniscorthy in County Wexford. But Kent, just tell us a little bit about yourself there, will you?
Hi, good morning, guys, and thanks for having me on. Yeah, we're a long time in the business. I'm entering into my 32nd year in the whole financial planning space, and this year is quite a big year for us here in Ashmore Financial. Actually, we're 20 years open
Oh, congratulations.
in June of this year. Yeah, it's been a great journey, Paul. As you've touched on in your previous podcasts, and starting a business from zero can be daunting, but it's very rewarding. And 20 years on, we're still standing here with a very successful and well-known brokerage and covering all of Ireland, really, but primarily, I suppose, Leinster, really, where we our main demographic.
Brilliant. And you know Dan from the last couple of live shows as well. So, Dan, you're very welcome here today again. Now, I suppose today, to get right into it as well, the last couple of days we've been talking a lot about around this, all around the business and the operation of the business. And we spoke the day before yesterday about how we approach from a family perspective in the first instance, and that how when you look at the family first and working on the financials and the goal planning and the requirements that a family has, we move then from the family into the business and making sure that the business can provide for what the family are looking for from that financial aspect. But today we wanted to move that on and talk about a concept that we have been discussing internally here, which is this family office approach. Now, family office is normally kept for the ultra high net worth individuals, and what a family office in our perspective we're talking about here is where you have all the advice into one place, and that advice into one place, gathered together, connected advice, using that advice to work on a situation for a client to help the client solve the issues and look at the opportunities that are ahead of them. So this is what I want to talk about today. So Dan, would you like to just go first and tell us your story about how you're approaching and working with the clients in the UK?
Yeah, absolutely. I think probably first, I'll give a nod to Kent, one of our first meetings, certainly our first meeting in person, where both yourself and Paul came and delivered a session when I was working in the world of SaaS. We had a meeting with a group of other accounting practice owners, and it's where you introduced the idea of something that we've been talking about in terms of looking at this planning piece for our clients and how we really got into this position of true advisors to those clients. And we talked to, and certainly you promoted the real value of protection. And we'll come on to that in a second. But I referenced the meeting because it was a turning point in getting me on the road of understanding how we can really offer value to our clients. So I thought it was important to reference that because it was a point in time that changed the mindset for me. And that has led to what Paul, you and I have spoken a bit about on these sort of live broadcasts that we've done, where we approach this in a family first sort of concept of approach. And then we look at what you've referenced as this family office. Now, what I would say in terms of its most direct sort of influence on what we're doing, we have with our clients consideration to the individuals that sit behind the businesses, but we absolutely have, and this isn't definitive or exhaustive, but we have this idea of income optimization, wealth management, and tax mitigation. Three pillars of effort that we want to ensure that we do not identify and focus on one of those to the detriment or jeopardy of the others. And by having that holistic view and understanding all of those factors that are in play, you put the pieces of that jigsaw together in such a way that you're creating a configuration that allows for all three of those. So we optimize that client's income, we ensure we maximize their wealth through different strategies, and we mitigate their position from a tax perspective. And that's where the ability to look at it holistically, all of those things you mentioned, Paul, and certainly what Ken, I know you'll be able to talk to us more about, that's where we're really able to offer this value.
And in the context of that is the concept of connected advice. And it's the concept of when we're looking at a situation, or we're looking at a client or a family or a business, one of the first areas we always look at in here is risk management. Where are the risks in the business? And the risks we normally look at are the risks considering we don't have enough cash in the business to run the business on a day-to-day basis, or we don't have enough sales in the business, or we're starting, or we're at one of the four stages that we always talk about: startup, grow, scale, or harvest. The other risk is one of the things that Kent is absolutely adamant on, and it's the risk of I'll let Kent tell that part of it, but it's understanding where risk is, how we can mitigate risk. And on that, Kent, can you just talk about your approach and where we always begin with a client?
Yeah, traditionally, guys, I suppose with our work in the UK or here in Ireland, you sit in front of individuals, and there's this misconception out there that wealth management is just for the wealthy. It's actually for everybody, because like the most important asset anybody has is actually their income. So probably 90% of the population at the moment, thankfully, is in employment. So like they have to protect their most important asset, which is their income. So from a wealth management perspective, I would always start our journey with anybody with protecting their income. Okay, because that ultimately protects their family, it protects their mortgage, it protects all their outgoings. Like it's quite an interesting exercise if you just write down your salary on one side of a page. If you want to go back to your old Excel sheets, which I know you've all gone well beyond now at this stage, but go back to the old school where you write your income in one column and all your expenditure on the other. And how do you meet everything in the right hand side if the left hand side is gone? So rather than talking pension first, or lump sum investments or children's education, protect that piece first, and be that a very high net worth individual, or someone like ourselves with our families and just working for our salaries. Like everybody has to protect that asset. So as far as I'm concerned, unless you start the journey on protection first with me, I'm actually not necessarily interested in working with you, because your priorities maybe aren't where they should be, really.
Yeah, and I mean, like we've seen over the years in the practice here, and we've also seen personally here, the effects of not being protected. When we look at the family first and the family office approach, risk is a genuine thing. Now, risk is not always bad. I mean, business owners and entrepreneurs, the three of us here, we've taken risks in our lives, and we like the element of risk, and risk is fun as well in a lot of cases. But you have to understand the cost of the risk, and you have to understand how risk can really and truly decimate a family or the business. And that's the context that Kent is talking about here and Dan is talking about, just to make sure that in your business, in your life, you're understanding the cost of that risk. You're putting the financial cost back onto the risk of not doing something. And the financial cost of the risk of not doing something can have a catastrophic effect long term, not just on your business, but on your life. So it's that context. So Dan, you're dealing with the clients over there on a day-to-day basis with the CFO model that we're doing there, this fractional CFO. And how are the clients reacting when you talk about this to the clients?
Yeah, it's quite stark, really, the response, because the sort of acknowledgement that it's a refreshing approach. So getting the feeling, certainly from what we're hearing with our clients, that this isn't something that clients are used to. The opening up of the conversation that we're having with our clients to understanding our clients as a person and as a family enables you to have that level of conversation and especially with protection, maybe not an easy conversation to have, but having approached it in the way that we do, it allows us to have that. And certainly the clients, in terms of their feedback, it's refreshing. It allows them to understand the opportunity as well as understanding what a bit of a game plan is. A game plan that makes sense for them, for their family, and incorporates considerations to their business, which I guess crudely but rightly, their business is a vehicle to serve the objectives and the ambitions of their family, them and their family. So if we're not doing it, then we're doing a disservice.
I would 100% agree there. It is so, it's not that it's refreshing, it's something we inherently do anyway. And like Kent and I have worked for a number of years together, and we've seen the benefit of the connected advice. This is no disrespect to any advisors out there or any approach that anybody has. Our approach is a bit, like we like to think our approach, whereas it's the same as a lot of people, we do it a bit different. So Kent and I, you have sat on many of the meetings with me where we're talking about being tax smart, and where we're talking about understanding effective tax rates and bringing the tax down. And a client will naturally progress towards the person that they believe is giving them the advice and understanding their personal situation and needs. And like we have spoke with people about building pensions and building wealth management, and it's not all about that. It's all about understanding, Kent, isn't it? That the right advice for one person is not necessarily the right advice for the next person. But the fact that you and I are sitting together talking about them is very powerful with the client in the room.
Hugely important, Paul, because you know, they have all the expertise around the table. You know,
Yeah.
you're coming at it from the tax advice, and then I'm coming then possibly with the solutions to be in a position to avail of all the tax benefits that are out there.
Yeah, yeah. And like it's not the tail wagging the dog. Do you know what I mean? So it's the fact that we're sitting around, and like the three of us are sitting together at times and talking about a client case. Now if you're a client of that and you're sitting around, you have a tax advisor, you have a financial planner, you have wealth management, you have legals, commercial legals, you have bookkeepers, accountants. Like that family office approach in that context is really powerful. Do you know what I mean? So the person then, we can help them with a joined up approach to avail of whatever is out there for them in terms of all of those service offerings are there.
Absolutely, it becomes kind of I suppose what you're trying to create, Paul, is the one-stop shop. Really, as you know, we have clients now that nearly ring us if they want to change their car. You know,
Yeah,
the relationship actually gets to that level, which it's very rewarding from our perspective. But obviously, that the clients then, they're appreciating the level of of expertise and the trust that they have in the people that are around the table.
yeah. So if you're approaching, Kent, a person that has a pot of money there, has a pension build up, they're in their 40s, they have their home, they have their mortgages. Like if you're taking on somebody in that context, just walk us through the journey with them. Like what does the journey look like when they're sitting with you as an advisor? Like how does that whole thing work?
But ultimately, we will sit, we sit down with them and find out what's important to them first. There's no point in me telling them what's important to
Yeah.
them. So it's you got to listen. And I think the best advisors out there are the best listeners. Sometimes we're really a counsellor, and we can be counsellors, but you find out what their plan is and what their goal is. And like they might have a big pension pot, but if you're in your 40s, Paul, the only way you can access that in the event of illness and or accident or whatever is literally by death. It's as simple as that. So it's to continue to build their wealth, but also to protect them on the journey as well. A lot of people aren't aware of that, and we were only discussing it here in the office this morning. Like as you know, part of what we do here, we've a very large mortgage brokerage here, and we've had 6 customers this year who started out on their journey with regard to a mortgage. Thought the big issue here was getting the mortgage, financially qualifying, showing their deposit, etc. And as it turned out, the mortgage actually sailed through. And the big problem we're after hitting now is on the protection side of it, because due to different medical reasons or whatever, with test pending and things like that, the protection department here is actually unable to secure them cover at the moment, which basically puts their mortgage on hold, which means 2 of them could potentially be losing their house because they can't close in time. And again, it's back to protection. I'm like a broken record on it, but you're never too young to put a protection policy in place, because like Paul, you and I can write the book on it as regards, because you never know what tomorrow will bring. And get it in place early. It can be done relatively very cheaply, actually, even just a basic life cover plan, and you have that in the back pocket then for the future. To go back to your question, you said it a moment ago, every case is different. So where would I start? I start by listening, and I start by finding out what their priorities are. So I'm not kind of avoiding your question or.
No, you're answering the question. You're answering the question really well there in the context of the approach. As we talked before, the same rules apply to everybody. Everybody has the same opportunities. It doesn't matter if you're the wealthiest person in the country or you're the person in the country that's starting out. You have the same rules applying. It's adapting those rules to your personal circumstance is the absolute really big thing here. And for me, what I'm listening to you now and I'm talking about, if I was starting out with my partner getting a mortgage, the very first thing I would do is I go in, the 2 of us, and try and apply for mortgage protection or life cover. It'd be one of the first things I would do to try and see, can I get that into place? at the very initial stages of this, and then maybe that policy could be assigned, and that's something practical that they can actually potentially do. Is that an approach that could work?
Absolutely. I've had 5 conversations this week with people, and it's hard, because they were about to move into their dream home in the next probably 2 months, and suddenly that's on hold now because of a pending test. They can't get in to get the test done. One individual was actually next September, with the medical system here in the country, so they can't get an appointment. So that's hard news to tell somebody. And we would always start on that start of the journey probably 2 to 3 months prior to drawdown, thinking that you've plenty of time. But now,
First thing.
first meeting.
And following on from the mortgage, when we're talking about the mortgages there, you gave one of the best tips that I have heard for in a long number of years when we were with a client there recently, is the client had a variable mortgage, and I think the mortgage was a 20-year mortgage. Sorry, it was a 25-year mortgage. And you sat with the client and you were sitting talking to them and said, look, we were talking about expanding, and we were talking about where to put monies and where to put costs. And you said, we should really consider now what it costs to buy back a month off your mortgage and reduce that 25-year mortgage down to 20 years. And you were able to bring a bit of a program up onto the computer. And it astounded me that in the space of about less than 2 minutes, and we all know Kent is so good in, he loves the computers and he loves the programming, but this tool was actually incredible. He sat down with the client in the space of I don't know how long it was, 3 or 4 minutes, and was able to explain to the client that this particular, if you increased your payments by 20 quid a month, it resulted in a huge look at the mortgage. And we also looked at another case together, and Ken says, and these people had the mortgage for 6 or 7 years, and said, would you consider, it might be time to reconsider with the deals that are going on at the moment there, to remortgage. That's something that I would never even consider, because people think when you have a mortgage, it's there forever. But the stability of this, do you want to just comment on that one, Kent?
Yeah, I suppose it's the fact that we're a broker, Paul. Okay, that we're not a one-stop shop. A lot of people would have, done their mortgages maybe directly with the bank. Okay, so the bank can only talk about their products, and their products being, say, they're tied to one life company for protection, and they're obviously tied to their own rates. Then that's all they have in the quiver. Whereas by coming here, setting up a meeting with Martin and discussing rates, there's a lot of good deals out there, but provided it's right, because obviously there's a cost to change as well, and that's very, very important to consider. But there's a lot of deals out there with banks at the moment, and it's definitely worth spending some time. People spend hours pricing their house insurance and their car insurance every year. Their mortgage is their biggest financial outlay, so invest a little bit of time in that, because it could save you a lot of money. And equally, if you're saving money on rate, for example, just to touch on what you said a moment ago, whereby, if you're on a variable at the moment of 4.5%, but maybe there's a 3.5% fixed rate there, you're used to paying back your mortgage at 4.5%. So from that perspective, maintain those payments, but you're shortening the term there maybe 5 years. Okay? Equally, you've seen what we do, by shopping around, say, for the protection side of it as well. We deal with the five main protection providers in the country, right? Each of them have different spaces where they're good. Some are good with smokers, some are good with non-smokers. So from that perspective, there can actually be a huge variance there in cost. Yeah, and just equally, the last point, everyone is very, very healthy now, thankfully, and maybe giving up smoking and things like that. But when they took out their mortgage, maybe they were paying smokers' rates on their protection. That they could now benefit from if they've given up smoking for more than 12 months, be in a situation where they qualify for non-smoking rates. So it's just really important to invest in the biggest outlay that people have, which is protecting your income and maybe looking at your mortgage, your big outlays. As you know, Paul, people they'll spend 2 hours going around shopping to save 50 quid on their car insurance.
Yeah. And Dan, you have a small family, and we've talked about this in terms of the journey of creating savings for your child, creating education funds, and it's these conversations jointly together is what the point we're trying to make here. It's the benefit of the combined knowledge, and we can't be experts in every single area of this. So what we have done is we've made these strategic partnerships. We've built this stuff together, and the fact that once the synergy of the three of us together, that offers so many years of experience, but it also offers the ability to talk about the client specific situation. And that's the real concept, I suppose, of the conversation, and that's the real crux of what we're trying to achieve here.
Yeah, yeah, that's it. And connected advice, Paul, you coined the term, and I think that's exactly what we're talking about here. And I've just sat back and I listened for a good 5 minutes there, because Kent talking through those points, that reinforces it for me. I'll meet with clients today, I'll meet with clients tomorrow. I'll understand there'll be an evolution of their situation, and then there's opportunity for me to identify. I'll remember what Kent talked about, and we've got the opportunity then to provide that connected advice piece.
And who wins when you have connected advice?
Client.
The client. The client always wins when you have that connected advice. And it's to strive to learn, it's to strive to put the stuff out there. So listen, I just want to personally say thank you. This format again, having Kent on. Kent, thanks. We gave you loads of notice for this, in fairness, like. Yeah, we rang
Thanks
you
for that,
10
Paul.
minutes
Yeah.
ago and said, come ahead, we're going to have a chat. But the format of the idea of sitting on and having a chat on this is the thing that really helps. So thank you again, everybody, for listening. We will continue with these, and have a great day, and we'll talk to you all very, very soon.